Hi everybody, Frank Finance here. Thank you so much for joining me today. Today's an exciting one. Today's going to be my first stock analysis. I'm going to be going over British Petroleum's ticker symbol BP. If you haven't already, please consider subscribing, like this video if you think it provides value, and consider sharing it to those who may benefit as well. I'm going to be producing videos every Friday. I'm going to publish them at 10 a.m. Central, and I'll also be coming out with some market and stock analysis on Tuesdays. Not sure on the time I'll be publishing those, but I'm thinking probably 10 a.m. as well. So without any further ado, let's get started. As part of today's analysis, I'm going to give a brief description of the current business, how BP plans to make changes in the future, any past price swings. I'm going to look at the correlation between oil price and stock price. I'm going to look at their performance relative to their peers. We're going to briefly look at the fundamentals to gain any insight we can there. And then lastly, I'm going to round it out with some pros and cons and give my input. All right, so British Petroleum is an oil major fully integrated between the three segments, upstream, midstream, and downstream. In the upstream segment, we really have the extraction of oil out of the ground. In midstream, it's the storage and transportation. And in the downstream segment, we have the distribution as well as the refining. Now, it's important to note that British Petroleum is in all three of these. When there are price fluctuations, like for example, if the price of oil goes up, it really benefits upstream. Conversely, if the price of oil goes down, it negatively impacts upstream comparatively more than in the downstream segment. So for example, as oil prices dropped during the pandemic, really the downstream segment was the most, I shouldn't say profitable, but it was less impacted than the other two segments of the market. So we know BP is an integrated oil company, but as renewables and electric vehicles come to market and the demand for oil decreases, what do oil companies do with this? Well, BP has a plan, and they shared this earlier in the summer of 2020. So I just want to highlight this here. By 2030, they want to reduce their oil and gas production by 40%. That's quite a lot, but over 10 years, that should be minimal impact year over year. And they want to shift their production into more of a integrated energy company instead of an integrated oil company. So they're looking into other types of energy. They definitely want to be net zero carbon emissions. And I believe they're looking into hydrocarbon and other renewables to replace the energy created by oil. Now, I just want to stop for a second and say that oil is definitely where they're making their money now, and they don't have a plan for profitability with their renewables. But what I do like about this is that at least they have a vision for the future, they're planning ahead, and they're starting to diversify their portfolio, which if there does become in renewables and electric vehicles do become and they catch popularity, they at least are starting to move in the right direction for change. Looking at the price history of British Petroleum, I wanted to highlight some big key events that caused price swings in their stock price. So in 2008, you can see the oil price went from $160 a barrel all the way down to $55. In the next year and a half, they almost recovered fully. And then they had the Deepwater Horizon spill. Over the next 10 decades, they would pay out over $60 billion worth of damages. So that was a really big hit to their brand as well as their pocketbook. Between 2010 and 2014, there was a lot of the price per barrel continued to rise all the way up into the hundreds, and that caused an oversupply in the subsequent years up until 2016, where it would bottom out. It hit $33 a barrel. In the last 4 years, the price of oil has slowly been increasing. And then when the pandemic happened, what happened? The demand for oil basically went to near zero. There was a big oversupply. Those midstream guys didn't have anywhere to store the oil, and people just stopped producing because they had nowhere to produce it. The refiners didn't have anybody to buy it. And the price of the barrel went all the way down to $18 a barrel for some period of time. And now it's back at $60 a barrel from where it was pre-pandemic. So moving on, I want to look at the correlation between oil and stock price. On top, we have the price of oil. On the bottom, we have British Petroleum stock price. On the top, you can see that oil was relatively stagnant for the last 4 years between 2016 and the start of 2020. And you can see that British Petroleum stock price was actually in an uptrend relative in the last 4 years. And when oil prices were in the $60 range, you can see that their stock price peaked at $46.50. And then at the start of the pandemic, they hit $35 and basically have fallen since then. As you can tell, the price of oil has actually rebounded from that around $50 at the start of the pandemic up into the 60s right now. And it's hanging out there for the time being. So depending on how oil prices do, I do expect the stock price to follow. Next up, I wanted to compare the price performance of British Petroleum versus their peers. So I chose companies that were integrated oil companies in the top 10 producers. I chose Chevron, ExxonMobil, Total, and Royal Dutch Shell. Now, you can look at the recovery since the March 23rd low is where we started here. Chevron's at 90%, Exxon at 80%, Total at 66%, and Royal Dutch Shell at 58%. Now, I believe Royal Dutch Shell is its closest peer as they're in the same European area. Exxon and Chevron are US-based companies, and they typically carry a higher premium as that's just the way the market has been working historically. So these US companies typically carry a higher premium than their European counterparts. But it is interesting to note that there is such a wide margin between British Petroleum and Royal Dutch Shell. So moving on to the fundamentals, I'm going to start my way at the top and work my way down to the bottom. For net profit margin, this is really in line with all their competitors, really nothing of a huge difference here. Long-term debt to equity is substantially higher as compared to majority of their peers. I think this is of definite concern. Now, when we look at return on assets, return on equity, and return on investment, they're definitely lagging, and they are the worst in each of those metrics. Even when we look at earnings per share, they're bleeding cash at a higher rate than their competitors. And the one bright spot we have on this is their price over forecasted earnings. So they're at 9.86. Royal Dutch Shell is a little bit lower than them at 9.08. As I mentioned earlier, Exxon and Chevron carry a higher premium, and they're at 15 and 16 respectively, and Total is at 11.5. So again, the fundamentals do not look great for British Petroleum. I think that this last year has been really rough on all these companies, and they haven't done a particular good job at protecting basically their financial health. Now, I think they've taken a lot of debt on in this last year as to ride themselves through. They've made some actions to clear up the books. They've reduced CapEx, and they've also tried to, or actually they did reduce their dividend payout to help stop the bleeding of cash. But they still did, I think, comparatively a worse job than the other oil majors. And I think they're getting punished for it in their stock price right now. Okay, so to wrap up this stock analysis of British Petroleum, I wanted to go through a pros and cons list. So on the pros side, I currently have them undervalued relative to their peers. I believe oil prices will reach $80 to $100 by the end of this year of 2021. Global economies are opening up, and they're continuing to open up, and that's going to increase demand. Production currently remains modest. This will help keep the price of oil, as long as demand keeps rising, it'll cause the price of oil to increase. And then ESG transformation at BP could turn them into a long-term play. Now, going through the cons list, we have the number one con, I think, for British Petroleum and any other oil major would be that if OPEC decides to open up production, this is going to really hurt the market, increase supply, and lower the price of oil, thus decreasing the price of British Petroleum stock, or at least it won't rise as quickly. Another con is the resurgence of COVID-19. That will definitely lower demand. If there's electric vehicle legislation that could affect long-term oil consumption. So it just depends on how fast legislation would be passed. So as long as we're looking within the end of this year, it shouldn't have any impact. But if they start banning oil, within the next decade, that could cause issues with any oil major. And then the last con I had is long-term debt is definitely high compared to the other oil majors. I believe if this pandemic does continue to drag on, they will continue to lose money. I don't believe long-term debt is a huge issue right now, but relatively it does make them less valuable as compared to their peers. So my final thoughts on British Petroleum. Oil as a whole has been very suppressed throughout the entire pandemic. I believe it has a little bit more room to run, and I believe British Petroleum is definitely the oil major that I would choose in order to make that run. I don't believe oil is a long-term investment. I am not investing in oil and gas companies as a long-term play, but because of the current situation of the pandemic, it has made the prices of oil and oil companies very attractive from a value perspective. So my holding duration for these companies is probably anywhere from 6 months to 2 years. I'm not looking at these companies for 10-year, 20-year plays. So with that being said, I believe British Petroleum stock price can get anywhere between $30 and $40 by the end of 2021. That indicates a 15 to 56% upside. Now, there is some minimal downside risk. I believe its downside risk is about 20% at its current price of $25.50. Now, that would make it drop down into the $20 range. And I believe at that point, you may consider, or what would make it go down to that is really if OPEC decided to open up production, because I believe at this point, demand is going to outpace supply. Well, there you have it, folks. That's my analysis of British Petroleum. Let me know what you think in the comments below. Do you think my analysis is spot on, or do you think there's any issues with my thesis? Please consider subscribing. That really helps me out. Also, like the video if you did like it. Consider sharing to anybody who might find it useful. And thanks so much for joining me today. Frank Finance out.